This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. Going to give you a stock market update for Friday morning. We want to look at the trend and momentum for the S&P for the monthly, the weekly, and the daily. And then we will take a peek at the hourly as well. But I think our focus needs to be more on the weekly daily combo right now. And then once we're also going to take a hard look at sentiment, and we're going to look at the overbought, oversold, as well as volatility. We got to keep an eye on all this stuff and do it on a regular basis, I think, and then we'll see the shift that takes place. Now, it hasn't shifted yet, and it hasn't surged yet, but one of the two is going to take place. So let's go through this and see where we stand right now. If you want to learn more about my approach, I would suggest starting with the book. It's at rabilstockresearch.com/book. Now, I will say that I just released a new course. I'm offering my courses now with lifetime access, which is new. So if you have an interest in that, you can go to the rabilstockresearch.com/services page, and you can find out information on all three courses. So we're going to start with the sentiment, which is what I typically like to do, is and show that we've reached 43% more bulls than bears. Now, I only show the difference between the two, the bulls and the bears. And again, this is Investors Intelligence Sentiment Survey. It's essentially the guys that I know from Investors Intelligence read a whole bunch of investment newsletters, and they determine whether they're bullish, bearish, or in correction status. And what I've found over the years, I've been using this for over 30 years, is that when the bulls get to 60, right now they're at 59%. Now that's the highest level since the summer of 2021. All right. Now remember, 2021, we had a huge number of bulls, but we didn't top out until the end of the year. It was the summertime, late summer, where we got this big number of bulls, and then it took literally until early 2022 to really turn to the downside. So this is my whole reasoning for using this as a secondary indicator. It's not a primary indicator for me. It's something that I want to know. Because if this lingers and this keeps moving up, if this thing's, anywhere near 45%, we should be, there's an elevated amount of risk out there. All right. Now, we don't do anything unless we get signs of distribution, signs of some kind of climax, signs of a reversal of trend on the shorter time frames. If none of that happens, then, we don't do anything. And so we don't want to make a decision to sell based on this. We want to know what's going on with this, because that'll tell us maybe about the potential severity or how long it takes or where the opportunities are when things turn back down to the downside. All right, now let's look at this overbought, oversold oscillator, which again, same thing. This doesn't really qualify as a timing tool. You would think it would be, because it's, hey, overbought, oversold. It's an RSI 5 on a weekly chart. It should be timely, but look at how long this has been overbought. I mean, theoretically, we could just stay overbought. It doesn't have to go down. So got to be careful about using either one of these categories as a timing tool. All right, we want to use this as a backdrop. Now, we're looking for signs on the short time frame, especially the daily, for a signal that we could be getting into something a little bit more serious. All right, and then what we're going to want to do is watch and see how fast the bulls drop. How quickly do they drop off? Because, if this were to drop from 40 to say 20 or under 20 or something like that, and we're in a bull market, then that would be another buying opportunity. All right, we don't have to go negative to get a buying opportunity in a bull market. In a bear market, you want it to turn negative. You want to have more bears than bulls. But in a bull market, you're not going to get those signals. It's kind of like with RSI. RSI in a bull market or in a bull trend, you're only going to get to neutral. You're not going to get to oversold all that often. All right. Okay, so I just want you to understand that. But both of those camps are in the negative area right now, right? They're in terms of market conditions, I would say, okay, we've shown a little bit of deterioration based on sentiment and this overbought condition. All right, let's look at the, let's go ahead and switch. Well, actually, before I switch to the charts, let's just update you on here. We did get the daily to switch back to negative when it comes to volatility. It jumped up again. We haven't had any change on the weekly volatility. And And then all the trends are positive and all the momentum is positive. All right, let's start to go through the actual charts now. And let's just look at this. You see how the volatility was down. I'm using the moving average here. All right, this is what I want to key on is the moving average, because the daily ATR can jump around. It's very volatile and move up and down and all that, right? But we want to watch the trend, and that's this 18 MA of the average true range, and that's now rising. Now, if this were to come back up here and kind of break out, we'd have basically more of a confirmed trend in the ATR. The ATR is trending to the upside, but right as it stands right now, it's still very negative because the volatility is jumping off of this low, and we're turning to the upside now. Nothing's happening with the trend because we keep respecting the 18. I'll get into that in a minute. But I mean, the fact is that we had a really smooth period here without a lot of volatility. And now we're getting into a trending period. It's still trending, but it's a higher volatility trending period. And that's where the risk becomes elevated. And the funny thing is that it doesn't even mean that it has to go down. I mean, usually it's a precursor to that, but a lot of times it just means if you put on a trade here and there's volatility, you could just easily get stopped out. So you have to be aware of it. It's a lot of what the new course that I just released is about. By the way, if you guys, if anyone is really enjoying this material, I'd appreciate you hit the like button and also subscribe. I'm continuing to try to grow this channel. All right, let's look at this weekly average true range. So the weekly average true range has been down for essentially the entire year. Now, what's interesting is if you go back to the bear market, it gave you kind of an early warning signal before it peaked. And then through the entire bear market, it was rising. And then right as things started to shift at the beginning of the year, it turned back to the downside, and it's been down all year, right? This is a very helpful tool to know where we stand. And there just isn't enough volatility to expect some kind of a reversal yet. Remember, back here, we got an early warning sign. It was already turning back to the upside. We haven't even started that process yet. It's still incredibly early. If we're topping out now, it's really, really early, all right? Okay, let's take a look at the time frames. So we are now in our 5th month of going up. Right? I mean, 1, 2, 3, 4, 5 straight green, big green, not little green. A lot of pretty good sized green bars. So the MACD is starting to get a little separated from its signal line. I mean, these are all things that I think are relevant. That tells us that yes, in the near term, the risk levels are somewhat elevated. All right. Now, I always go with momentum. Momentum wins over getting overbought, or if we have a good trend in place, you got to go with it. Now, this is a good trend. This has good momentum characteristics behind it. A lot of strength, and we're up about, what is it? I guess right now we're up. We haven't finished out the week, but right now we're looking at being up 17 in the last 19 weeks. All right. I mean, we're in uncharted territory in a lot of ways. When market just doesn't do this very often. It has happened. I'm not saying it hasn't ever happened, but it's not. It's an unusual situation. Don't think and don't try and change your trading approach or something like that to try and catch periods like this, because they don't happen very often. All right. Like if you adjust your trading strategies to make money during here, most of the time it's not going to be useful. All right. So keep that in mind. All right. Now let's look at what's going on the daily, because we've got this 18 that keeps being respected. We've got an 18 that's moving up at about the same rate as the 40. We still have decent momentum characteristics. It's not great because the ADX has dropped off. We're kind of divergent, but we're not really in a divergent in a way that's really troubling because we're still above the 25 level. But what I'd be on the lookout for is, again, two things. So we're going to get one of these deals where we break out of the channel to the upside and we surge. All right, where we go to some kind of a surging market phase. Right now, it's actually been, believe it or not, on a daily time frame, this has been pretty orderly. It's increased in its volatility, but it's been pretty orderly. But it just seems like every time it comes down to the 18, there's buyers. And so maybe we're going to get that shoot to the upside and get some kind of a climatic phase. And if it plays out that way, then we're going to want to be down on the hourly chart, kind of playing that trend and looking for a reversal there. But I think it just makes more sense that we sit back and wait for a break of the 18. Now, when that 18 is broken, I want to see the red DI break above the green DI, and I want to see green DI kind of dropping down under 25. We need a shift in this because right now this isn't really very bad. There's a pretty significant separation. Green DI is at 39, okay, and red DI minus DI is at 23. All right. I mean, that's a massive opening. The difference between those two, it's massive. That is not really where you get, highly concerned. I know. So, and the other thing I wanted to mention is this MACD setup, right? We're above the zero line. Whoops. We are above the zero line. So that means the bias is positive. The trend's positive. Okay. The 12 period exponential moving average is above the 26 period moving average. It's essentially in an uptrend as long as it stays above zero. All of this is kind of noise now. It's what I've heard some professionals call this an irregular uptrend, right? Where we get these drops and they just don't end up meaning a whole lot. It's just a lot of noise until we actually break the zero line. All right, so you got to be careful about trying to catch every little nook and cranny reversal. I've been saying to my subscribers that I don't really want to get sucked into looking for divergences right now. I think we're in such a strong trend that it looks like it could be creating divergences, but what I'm looking for is a break of the 18 or a surge to the upside. All right, I don't know any other way to do it. So I know I've been repeating myself, and we're going to keep doing this, and eventually we're going to see a shift. This is the only way you can be consistent in the market is you have to do this work weekly and then wait for the changes to develop. All right, we'll keep an eye on it, and you guys, everybody have a good weekend. We'll see you next time.